for our client base, it is Bitcoin overwhelmingly number one, their focus, a little bit in Ethereum, and very, very little everything else. And when you think about it in terms of, various metrics and dimensions, I mean, Bitcoin, 52% of the market cap of the whole asset class, Ethereum, but 17-ish today, maybe 18. And the next that is even sort of investable is like 3, right? And so there's just worlds apart there in terms of, track record, liquidity, product market fit, investor narrative clarity, all these things, right? So that's where I think there's some misplaced speculation that there's going to be a long tail of others from us, and that's really not where we're focused.
What's going on, guys? Kevin Cage here with another crypto update. Hope you enjoyed today's video, and let's kick it off. So first up, this was a clip shared by Crypto Eddie of Robert Mitchnick over at BlackRock. We know Mitchnick because he made that XRP valuation framework with Susan Athey back in 2018. He also spent some time with the company Ripple in 2017. In this PDF you can find online, the title is right here in the top left, for Bitcoin ranging from low estimates of 45,000 to high estimates of 93,000. Along with XRP on page 20 showing low estimates of $6 and high estimates of $32. So what he says here is very important. He's the head of digital assets over at BlackRock. Their primary focus is Bitcoin, maybe Ethereum, and then he also said in quotes, 3 investable assets, but just emphasize that their major focus is on Bitcoin. So at least from BlackRock, we're likely not going to see spot ETFs for meme coins, maybe in the future a few others, and I'm interested to know what 3 assets he had in mind. He mentioned regulatory clarity, liquidity, narrative, all types of concerns. And I would assume that BlackRock's at the very least looking at assets in the top 10, maybe in the top 20. So omitting Bitcoin, Ethereum, and stablecoins like Tether and USDC, I know there's some ongoing concerns with Tether. We know Binance has different issues. Solana, it has adoption, but the network congestion and all types of things, I retweeted a very interesting thread going over that. We know XRP is labeled as not a security in the US, but there's still ongoing issues going on with the SEC. Dogecoin, meme coin, strong community, infinite supply. We can look at other assets. I still believe that XRP has a great chance. We have Cardano, Avalanche, Polkadot, Chainlink, Matic, Near. What do you guys think? We also just got some huge news with Uniswap. Solcoin Daily shared, first they came for Binance to protect us, they came for Coinbase to protect us, now they come for Uniswap to protect us, when they missed FTX, Celsius, 3 Arrows Capital completely. And of course he ignores the company Ripple here. What the XRP case did was absolutely huge for secondary sales. And this isn't good what the SEC is doing, this is regulatory overreach. Uniswap is the largest DEX in existence, over $2 trillion in total volume since it launched. Ranked number 1 in most metrics, including over $6 billion in total value locked. And I like what Altcoin Daily says right here. This is like the SEC suing the NASDAQ and expecting tech stock trading to continue in the US. And just like Pano says, with this SEC Wells notice, this is corruption. DeFi is the antithesis of everything these traditional systems stand for. The SEC turns a blind eye to the misconduct and any corruption that their buddies do. But just like he says, because DeFi threatens to dismantle the cozy relationships and backroom deals that have lined the pockets of the financial elite for decades. And DeFi isn't just a set of smart contracts or an experiment in decentralized governance. This is the future of financial sovereignty. It's about giving power back to the people where it belongs. So is this Wells notice for Uniswap a major concern, or is this just part of the FUD with the potential of the Ethereum spot ETF to be approved this year? Next up, for XRP, I hope you guys enjoyed yesterday's video. We included some different edits, so if you guys like that style, let me know. Some really good information shared in yesterday's video. And what we know is there are predictions for the stablecoin market to soar past $2.8 trillion by 2028. $2.8 trillion for just stablecoins. That is larger than the entire crypto asset class today. Of course, we're still seeing the usual FUD by people that don't fully understand the difference between stablecoins, CBDCs, utility tokens, payment tokens, etc. And in yesterday's video, we highlighted Brad Garlinghouse's price prediction for the crypto asset class's market cap by the end of this year. Now, looking at the Bitcoin price chart over the previous 2 cycles, when we broke into highs, 2020 was pretty steep if you measure the angle percentage. 2017, we broke into highs, came back down, and then later blasted a couple months later. So taking a look at the Bitcoin price chart on the weekly time frame, we're in a very interesting position today. We're holding around 70,000, still on top of the previous cycle high. And right now, most of the altcoin market is pulling back. So I know we've shared this a lot during bullish impulses after breaking into new cycle highs, just holding this 21-week EMA, this purple line, this moving average, holding up, even wicking, back testing with candle bodies on the way up. We also did it in 2020, not super clean, but this angle was just very, very steep. This is timed with all types of things like monetary printing. So we've gone over before when Bitcoin first breaks into a cycle high, came back down and blasted later, and it was not as steep as 2020. It was more of a slow and gradual process of about 300 days finding its top. Whereas at the end of 2020, on some exchanges, we wicked into a high, and maybe 17 days later, we did that first major move into all-time highs. So for the Bitcoin price chart, we've yet to see that first major move, meaning that first massive weekly candle and close on top of the previous cycle top. So whether that's 80K or 100,000 for Bitcoin, we've yet to see that. In 2017 here, we created an all-time high, came back down, and if we just zoom in, we can see that we did backtest the 21-week EMA with candle bodies perfectly. I can zoom in a little bit more just so you can see right there. So I'm just looking at the previous cycles. I've never seen Bitcoin create an all-time price and not later draw its first major move. Of course, anything is possible, black swans and catalysts. But just looking at the structure, it looks like it's still going to be rhyming between these two. And because Bitcoin has somewhat been holding this level, just consolidating a bit around 70K, the 21-week EMA is still above 54,000. So the actual price today is around 54,543, right up here in the top left. So I'm just looking at the macro view here. Historically, we do see backtest to the 21-week EMA. I just don't know if we do it now or if we do it after the first major move. So 2017, first wicking into an all-time price, and about 300 days later finding its top. In 2020, that first wick, maybe that first move around there until that high, 133 days. If we went to the final all-time high where there's bearish divergence on the monthly time frame, we can see a little over 300 days. So we shall see, as long as we don't get stuck in another 200-day range playing a game of ping pong like we did back in 2023, but historically we've rarely seen us getting trapped once we created an all-time high. It's usually a lot faster. So I shared this yesterday to highlight the Fibonacci retracement from the cycle high to the cycle low thus far and looking at extension levels comparing the previous cycle. So both of these charts are the weekly chart for the crypto market cap. Now when I'm sharing this chart, I want to emphasize I'm showing the Fibonacci extension levels and the market cap prices at those levels. I'm not saying that this chart is going to go parabolic. Of course I would love that. We don't know the exact structure. But we know last cycle, from the 2017-2018 top to the cycle low for the total crypto market cap, we reached a 3618 Fibonacci extension, came back down to the 1618, and then later reached a perfect 4.236. Now we've shared in the past Bitcoin's diminishing returns reaching really high Fibonacci extensions like the 34, then the 8, then like the 3618, and it's going lower and lower. So we had this swing high, we could draw a fib, we had this swing high, we could draw a fib for the total crypto market cap, but I don't have a clear swing high for this level early days before 2017, so I couldn't draw an early one like I've done for Bitcoin in the past. So looking at these market caps between the 127 to the 4.236 Fibonacci extension, a big old range between 3.6 trillion to 10 trillion. Brad Garlinghouse, the CEO of Ripple, is calling for a $5 trillion crypto market cap by the end of this year. That's right around the 2 extension. The Gemini CEO is calling for a $150,000 Bitcoin by the end of this year on the Bitcoin price chart. That's right around the 2618 extension. So 150K Bitcoin, what would that require? That would be around a $3 trillion market cap for Bitcoin alone. From there, we could extrapolate Bitcoin's dominance and the altcoin market's percentage in that. So if Bitcoin reached 150,000, that would be around a $3 trillion market cap. Could there be another $2 trillion in the altcoin market, including Ethereum? We know Tim Draper's calling for a $250,000 Bitcoin. That's around the 4.236 in the 4618. And you have to question it, of course. These guys, he's a billionaire. He has huge vested interest and massive amounts in the crypto asset class, in companies, probably protocols, etc. And I do think it's interesting that both Ripple and Medico project a $10 trillion crypto market by 2030. I would like to see their actual projection and the numbers behind that, but I do find it interesting that's right around a 4.236. So I wanted to share these levels, and it's important to note that the total market cap for crypto has not reached an all-time price. It's really just a waiting game the longer that we're ranging below the previous all-time high. And looking at last cycle, so we have Bitcoin here on the left, and we have the total crypto market cap excluding Bitcoin on the right. So this is the altcoin market, also including Ethereum. Bitcoin drew its first major move to the upside. Around this time, the altcoin market was still down here. It wasn't at an all-time high price. By the time Bitcoin already drew some massive waves to the upside, getting closer to its cycle top, we can see the altcoin market was exploding into all-time highs. The 2017 cycle for Bitcoin and the altcoin market on the right is a bit different because we don't have a clear and super obvious swing high on the left. For the most part, the higher Bitcoin went, the higher the altcoin market went. When Bitcoin drew its first major move, we went significantly higher. So looking at the Bitcoin price chart for this month versus the altcoin market, Bitcoin has in fact wicked and had some daily candles at an all-time high price, but we've yet to see that first major move. And similar to last cycle, the altcoin market has not reached an all-time high price, actually in a very similar position, maybe slightly different retracements. So I wanted to share that with you guys. I found that super interesting looking at the previous cycles and Bitcoin's history and where we're at today. I'm not making fun of the bears, I'm not making fun of the bulls. Anything is possible and we're gonna see. But like I've shared in previous videos, my personal opinion, not financial advice, is that we are in the next cycle. And that's all based on a bunch of information we shared in previous videos showing the similarities of the previous cycles, the 618 retracement, the monthly RSI piercing, measuring the peak of the monthly RSI until we broke into an all-time high price that was the exact same length as this previous cycle. And looking at the past, doing historical analysis, it can never guarantee that you're going to be prepared for any type of black swan. And hopefully I've shared my opinion well enough of the structures and the similarities. And I'm playing it like Bitcoin's going significantly higher, right or wrong. Of course, there's going to be pullbacks eventually, 30-40% crashes like we've seen each cycle. When crypto pulls back or crashes, it's a scam. When Bitcoin and the altcoin market rally, everybody's interested. It's just a market. Alright, to finish up today's video, we're going to play this awesome clip of Jared over at iTrustCapital being interviewed with Rob over at Digital Asset News, a great YouTube channel.
That's so important is because about 2 years ago, a lot of things came to light when people dug through the terms of service on exchanges, as well as some of the lending platforms that are now infamous. What they realized was that in those terms of service, it literally says that if something were to happen to those companies in the form of bankruptcy, they would lose, the clients would lose access potentially to their funds, because the funds would be subject to creditors, because those funds are held on balance sheet for those companies, period. Now, our setup, we have a lot of regulations and compliance that are baked into our product because of the fact that we're an IRA provider and we have to plug into a qualified custodian to do what we do. Qualified custodians, as per their state charter and regulatory requirements, need to keep funds off balance sheet.
Right.
Off balance sheet means that if something were to happen to them, then the funds are not subject to creditors, which is just a huge differentiating factor. And it's a reason why people feel really comfortable on our platform, even though they're not able to hold the keys for the crypto in their IRA.
Right. So, okay, let me ask you a question then. And I get this question a lot. Let's just say for some reason that iTrust, something crazy happens and you guys go under. I don't think it's going to happen after this crazy bear market, but whatever. So let's say that you guys go under because it's off balance. What happens to those accounts? How do those get transferred? What would that actually look like?
Because qualified custodians are state regulated entities, there is a process, an unwinding process that the qualified custodian would work with regulators to return the funds to the clients. Now, in reality, if something were to happen, these clients would in all likelihood just be able to move the funds to another IRA provider, to another qualified custodian. So if someone moved their funds over via an IRA transfer or a 401k rollover to begin with, they would have the opportunity to move to another IRA via transfer, or maybe move it to their current 401k with their employer.
So really good information there. I wanted to share that with you guys for any existing iTrustCapital users or any future existing users. And for anybody interested, we have iTrustCapital linked in the top of the YouTube video description. I hope you enjoyed today's video. Thank you to all that like and sub, and I will catch you in the next one. If you enjoyed this video, I'd greatly appreciate if you could hit the like button, let me know your thoughts down below, and my link tree is linked in the top of this YouTube video description, with all links, crypto resources, and discounts. I'll catch you in the next one.